Welcome to The Explainer. Today, we're looking at the secret to business survival, mastering expenses. So I want you to imagine owning a business that brings in a whopping 100,000 dirhams every single month. Sounds absolutely amazing, right? Like most people would think you've totally got it made. But what if I told you that after paying all the bills, you actually only get to keep a tiny fraction of that?
It's honestly the ultimate business illusion. You've got money pouring in, sales are absolutely through the roof, and yet your bank account at the end of the month tells a completely different story. It leaves us with this massive, looming question, right? Where did all the money actually go? What's the hidden culprit that's just quietly draining the life out of this otherwise successful operation? Well, believe it or not, out of that impressive 100,000 dirhams, you might be left with just 2,000 dirhams in actual profit. Crazy, I know. It's a shocking number, isn't it? Okay, let's dive into this, because today we're uncovering one of the biggest, absolutely most critical secrets behind true business survival, and that is business expenses.
Here's our roadmap for today's explainer. First, the profit illusion. Second, what are business expenses? Third, fixed versus variable costs. Fourth, understanding operating expenses. And finally, number 5, how to control costs. Because ultimately, managing these numbers is the true driver of whether a business survives or fails. Section 1. The profit illusion. Let's kick things off with a scenario. Imagine two entrepreneurs. They each decide to start their very own online t-shirt business. They both put in the work, and they both sell exactly 200 shirts, literally the same product and the exact same sales numbers. But at the end of the month, Entrepreneur A makes a really healthy profit, while Entrepreneur B actually loses money. So why does that happen?
Moving to Section 2. What are business expenses? The answer to our little t-shirt scenario isn't their sales. Remember, they both sold 200 shirts. The difference comes down entirely to their expenses. It's a fundamental truth that so many scaling entrepreneurs just totally miss. You know, businesses often fail, not because they aren't generating revenue, but simply because OPEX bloat silently drains their cash reserves.
So, let's actually define our terms here. A business expense is any cost a company pays to operate and generate revenue. Every single business on earth has expenses. I mean, without them, you simply couldn't operate. They are completely necessary, for sure, but they absolutely must be rigorously controlled.
And this brilliantly illustrates why they matter so much. Imagine your business brings in a solid 60,000 dirhams in revenue. Fantastic, right? But notice how fast that money just vanishes. Rent takes 15,000. Salaries take 20,000. Utilities take 5,000. Add in marketing, inventory, and a few other miscellaneous costs, and suddenly your total expenses hit 57,000 dirhams. Your profit? Only 3,000. So even with really strong sales, standard bills can eat away an impressive revenue in the blink of an eye.
Section 3. Fixed versus variable costs. Categorizing expenses.
Because expenses chew through so much of your hard-earned revenue, businesses absolutely must categorize them. By sorting expenses into buckets, business owners can step back, analyze, and actually take back control of their cash flow. Let's look at the first major category. A fixed expense is a cost that remains the same every month, regardless of sales volume. Think of these as your absolute must-pay bills. No matter what happens out there in the market, these bills are coming due. To give you some concrete anchors, fixed costs include things like your rent, your insurance premiums, base employee salaries, loan repayments, and even your monthly software subscriptions. So here's the key takeaway. Whether you sell 5 products this month or 500 products, these specific costs usually remain exactly the same. Now, let's contrast that with our second category. A variable expense is a cost that changes depending on production or sales levels. Unlike fixed costs, these are going to fluctuate directly with your business activity. You can see this clearly with tangible items like raw materials, packaging, and shipping. It also includes things like sales commissions and transaction fees. It makes perfect sense when you think about it, right? I mean, if you sell 1,000 t-shirts, well, you have to buy 1,000 boxes to ship them in. The more you sell, the higher these specific expenses become. Section 4. Understanding operating expenses. Day-to-day costs. Let's move to and see how this builds into the daily grind of running your company. Because beyond just fixed and variable, we really have to look at the day-to-day reality of keeping the lights on. And that brings us to operating expenses, which is commonly referred to in the business world as OPEX. Operating expenses are simply the day-to-day costs of running a business. These are your everyday items. We're talking about employee wages, your utilities, advertising, office supplies, routine cleaning, maintenance, and of course, your internet and telephone services. A really good manager is constantly reviewing these specific OPEX costs. And why is that? Because tightening up everyday operational efficiency is genuinely one of the fastest and most strategic ways to improve a company's financial health. To show you how drastic this can be, let's compare two businesses. Cafe A and Cafe B have similar sales, but Cafe A tracks their expenses weekly. They negotiate with suppliers, they reduce electricity waste, and they use smart digital ads. Because of that, their profit grows every single month. Cafe B, on the other hand, they never check expenses, they overorder inventory that just goes bad, they pay for unused subscriptions, and they literally leave the lights on all night. It's a harsh reality, but Cafe B is on the fast track to failure. Two businesses, similar revenue, completely different fates, and it's all due to their expense habits.
Section 5. How to control costs. How to save money. Here is the really great news. You have the power to avoid Cafe B's fate. Businesses can actually improve their profits without increasing their sales at all, just by proactively controlling their costs. And you can do it in 3 clear steps. Step 1. Track every expense. The golden rule of business is that you simply cannot manage what you do not measure. Step 2. Separate your fixed and variable expenses so you know exactly which costs you can actively reduce. And step 3. Review your expenses every single month. I know, it might seem kinda tedious, but those small savings add up massively over time to build a truly robust, successful business. Section 6. Summary and final thoughts. As we wrap up this explainer, I really want you to take a step back and just look at the big picture we've painted today. Managing expenses isn't just about accounting, it's literally about survival.
So, the crucial point is this simple but incredibly powerful formula. Revenue minus expenses equals profit. The lower your expenses, without sacrificing the quality of your product, of course, the healthier and more resilient your business becomes.
Now, I'm really curious to hear from you. After looking at everything from rent to raw materials to daily operating costs, which expense do you think is the absolute hardest for businesses to control? Drop your thoughts in the comments and be sure to share this explainer with your classmates so you can compare notes. Keep tracking those expenses, and I'll see you next time.